Hey everyone, today on the final bar, we'll talk about an S&P pushing to further upside with authority going above the 3,600 level and staying there for now. A nice follow-through day to the upside with communication services, technology, both on the top of financials as well as a little concerned with energy and financials coming off yesterday. It was sort of, as I say, rotation back into tech, back into communication services, sort of everything resuming to the upside. Metals as well, gold up as well. We'll talk about all of that and more. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we look at these markets together through the lenses of technical analysis, behavioral finance, sentiment, breadth, investor psychology, whatever we can do to try to make sense of things in a crazy time. The S&P certainly impressing today with, after yesterday, a bit of a rotation away from those the cyclicals that have been leadership names sort of back into gear today with financials doing pretty well. Tech, communication services all sort of resuming their uptrends. So overall, a fairly healthy move. I'm excited to have Sean McLaughlin on the show today from All-Star Charts. Does a great job there, as well as at Trade Ideas, to share sort of a big picture take and also hit on a key stock in a key group that I think you should certainly be familiar with. We're also going to answer some of your questions from the final bar mailbag. I had some really good questions in the last day or two coming out of the Thanksgiving holiday, and we'll answer as much as we can. I did want to point out we have, as I mentioned, Sean McLaughlin joining us today, which I'm excited for. On Thursday, on the 3rd, we have Ari Wald from Oppenheimer. Tomorrow, we're actually going to do a special show. We're going to focus on sentiment indicators, talk about things like the VIX, put call ratios, survey data, all of that. Talk about how to incorporate that into your thought process. Ari Wald joining us on Thursday. Next week on the 8th, we have Dan Passarelli from Market Taker Mentoring. And then Chris Vermeulen is going to join us on the 9th. He's the founder of Technical Traders Limited. Also, as a reminder, I mentioned it on the show yesterday, we have a special year-end events. Super excited about what we're going to be able to put forth for you. We have a series of 10 experts sort of each of them giving their chart of the year, sort of the top 10 charts from 10 different strategists. We're also going to have a series of videos talking about how to reflect on your performance during the year and how to have an appropriate year-end sort of wrap session to your trading experience. Talk about sector rotation. It's going to be a lot of fun. It's all part of a series we're calling Reflections 2020. So much to debrief on at the end of this year, and we're going to get to it very soon. So look for further information about that as we get things started. I want to move on to our market recap. Start with a poll. As you know, we probably know we have a poll on our Stock Charts TV page at all times. Please take a moment when you can and respond to the poll. It's a great way to just keep a conversation going about what you're seeing and what you should be looking at. This was a bit of a quiz this time. I asked you, know your technical indicators. Which indicator is based on the difference between two exponential moving averages? I am very impressed, Final Bar Nation, 74% of you correctly answering MACD. It's called the moving average convergence divergence, and indeed it's looking at two exponential moving averages, and it's the short term minus the longer term, and that is the MACD line, and then there's a smooth version of that called the signal line. That's the main signal that you're looking at when you look at the MACD indicator. Some of you mentioned stochastics, RSI, Bollinger Bands. RSI actually does include exponential moving averages, but it doesn't look at the difference. It's actually smoothing out up and down closes. It just looks at the closing prices, how they change on average, and then using an exponential calculation for that ratio. Bollinger Bands actually don't. They're based off of simple averages and regression analysis, and stochastics are a very simple calculation looking at where the price is relative to extremes. And if you ask why I know those things, part of it was studying for the CMT exam. Where I really learned all of this was when I started at Bloomberg in the early 2000s. Part of my, process of learning technical analysis from my mentors there was to prove out every technical indicator we had in Excel and actually calculate them. And it annoyed the crumbs out of me at the time. And now I'm thankful that I can actually know some of those things. Continuing on with our market recap. So the S&P finishing stronger today. Again, the question we've been asking for a while is what does it do relative to that 3,600 level, finishing to the upside with authority, and I think following through as you might want it to if you're thinking more bullish, leaning more bullish into year end. Days like today would certainly make you feel a little more comfortable with that. The S&P finishing about 1.1% higher around 3630. Mid caps and small caps all about the same today. There wasn't a clear differentiation. It was sort of everything sort of rotating higher today, which is sort of a nice follow through all around. The Nasdaq up a little bit more, about 1.5%, and the VIX actually increasing as well, just below 21 today. On the bond side, you have yields going higher, above 93 basis points, and you can see the TLT down 1.5%. That idea of yields rotating back to the upside is something we've been talking about. Bond prices rallying up to some moving averages, some resistance, and we're getting that follow through today. So clearly favoring stocks over bonds. That ratio is going to continue to favor stocks here, as it certainly appears with more days like this. Metals and press, so sort of everything but bonds doing pretty well today, with gold up, silver up big as well, about 6%. So that that gold chart has looked relatively weak. It's been a challenging chart, but certainly getting a bit of a bounce today, bouncing off of the 50% retracement line on both of those. We'll look at that chart here in the middle. Cryptocurrencies, we've talked about Bitcoin, and at times I haven't really brought up cryptocurrencies a lot. I'm definitely leaning more into them now because Bitcoin pushing to all-time highs, nearing that key 20,000 level, which is the resistance it hit a couple years ago. And we've had a big multi-year base off of that level. So I think a lot of eyes on what Bitcoin does around that key resistance. If it's able to, break out, able to follow through, and if so, that certainly measures much higher than where we're at this point. Let's look at a chart of the S&P. We'll get some of the other charts as we have time for. So, we've talked about this range from 3,200-ish to 3,600-ish for a couple months now, and that's sort of the range we set in September, and that has maintained that pattern. I think regardless of how you'd measure, whether you think this is a range on the top in the green shaded area, the range at the bottom in the blue shaded area, whether you see this as more of a coil pattern, a symmetrical triangle of lower highs and higher lows. And, the chart of Amazon maybe looks maybe a little more clear like that, that pattern. Whatever you do to calculate it, I think it's undeniable at this point that stocks have resolved to the upside, whether it's following through above 3,600, which it is now done, whether it's breaking out of that pattern, which it did. We've certainly seen follow through to the upside with the RSI not overbought yet. It's sort of in that sweet spot within the bullish range, sort of mid-range between the overbought conditions and down in the 40 range. So overall, stocks certainly pushing higher. The leadership that you're seeing from technology, from semiconductors, especially in there, and things like financials participating with energy, and maybe the one that didn't really follow through to the upside today, but sort of the average stock doing pretty well. The concern, as always, as the market's going to new highs, are extremes in breadth, euphoric conditions that suggest that the last buyer has already placed their trade. And there's that anecdotal idea. And when I talk about sentiment and talk about euphoria, I'm thinking of some of these sentiment charts that we've talked about. The one that it's sort of my go-to that we keep going back to is this the name exposure index, which is essentially looking at active money managers and where they're at, what's their equity position. As you can see, a couple of weeks ago, went above 100% again, and it's done that a number of times. And I won't say every time, but almost every time, it's been at or near a pretty good market top. Whether it was the 2019 peak, which happened about a month later after it spiked above 100, whether it was back here in June of 18 or in August of 2020, where you had more shallower pullbacks within uptrends. When we get that much allocation into equities, more often than not, that's for me sort of an early warning signal that everyone's all in. And I remember talking with Tom DeMark years ago about markets don't top because of sellers coming in. It's an exhaustion of buyers. No one's left to push the price higher, sort of the anecdotal way of thinking of market tops. And this sort of lines up with that, with extreme allocation to equities, with the Ridex flows, which is looking at bullish versus bearish funds, sort of all in at extremely high levels relative to historical historical trend. So that's what concerns me is, has the anecdotal last buyer made their trade? Days like today tell you someone is left pushing price higher, which is of interest. I did want to just, to wrap up the market recap, look at a chart of gold. We talked about the weakness in gold, and I wouldn't be surprised if we still see further downside on some of these charts. I think overall gold, has plenty of upside left in the tank as a long-term trend. But again, we've been banging out a pattern of lower highs and lower lows, which is the definition of a downturn. We need to have higher low first. So now that we've bounced a bit today, my question would be on some pullback at some point, where do we go? Do we undercut these lows that we set earlier in this week? Do we hold that 165 level, which is the 50% retracement of the March to August run in the GLD? If not, there's further downside. It's sort of that 157.50, 158 range. That would be the next place. But today's certainly a bounce to the upside. Silver as well, with a nice bounce off of yesterday's interim low. So again, the question is that the beginning of something further, or more of a bounce before the next leg down? It's all about what we do relative to key support and resistance. On the GLD, I'm looking at 172.50, which is that 61.8% retracement level. That'd be the first indication that it may be less downside going forward and setting up maybe for a higher low in the near future. That's all the time we have for our market recap. Let's take a quick commercial break. Back with Sean McLaughlin. We'll see you in a minute. Hey everyone, welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. So appreciate you joining us on our show every day after the close as we debrief on the technical themes of the day. As a reminder, we're going to do another mailbag segment later in today's show. We'd love to answer one of your questions in our next mailbag segment at the end of the week. Shoot us an email, would you, at thefinalbar@StockCharts.com with any question on the markets, on technical analysis, on behavioral finance, whatever it is. Shoot it to us and we'll do our best to cover it during the show. You can also tag us on Twitter at FinalBarSCTV. Finally, on our YouTube channel, just put a comment below the video. We'll capture all of those, hopefully answer one of your questions on the air later in the week. I want to welcome on my guest, Sean McLaughlin. Sean's the Chief Options Strategist at All-Star Charts. Sean, welcome to the show.
Hi, David. Thanks so much for having me. It's a pleasure to be here.
It's good to have you on, Sean. I've known you for a while and I've always enjoyed following your work. We're, obviously at an interesting juncture with the S&P powering above 3,600. You're starting with us on the VIX. Talk us through what you're seeing here.
Thanks, David. So this VIX chart that I have up here, to me, at the risk of overstating it, I feel like this is the most important chart in the world right now. And the reason why I feel that way is not because of trading, not because of investing, not because of options. I think this has very strong implications for the human race. Now, I know I sound like I'm overstating it, but let me back up a little bit. I don't know if you remember where you were on February 24th, David, but when VIX spiked above 20 for the first time back in late February, I know where I was. I was on an airplane heading out to Southern California for a business trip with All-Star Charts when the market completely collapsed, right? And that was the first leg down of the coronavirus scare. Well, at that time, I'm on an airplane, I'm walking through airports, I'm in Southern California, I'm going to a lot of restaurants and doing a lot of things. You wouldn't know that anything unusual was going on in the world. There were people weren't wearing masks yet. There was no social distancing. In fact, if anything, people were, viewing this whole thing with suspicion. But to me, as a market participant, seeing what the market was doing, what was reacting, that was, to me, the big heads up that, oh boy, we really need to be paying attention to this. Because, David, as you know, the stock market is a forward-thinking animal, right? It doesn't deal with what's happening right now, per se. The stock market is looking 3, 6, 9, 12 months in advance. And so when I saw the VIX spiking like this with the stock market selling off, that was a big red flag. I came back from that trip and I said to my wife, I said, I think things are about to get really, really weird. And here we are now, David. I'm sure you're all up to speed on what's going on these days. But why this chart is so important right now, David, is because as a forward-looking instrument, the VIX is threatening, not there yet, but threatening to break below and hold below that 20 level in VIX. And if you read the headlines right now, the whole world is scared. The second wave or the third wave, depending on where you stand on that perspective. I mean, the hospitalizations in the US are way up. Everyone's scared. I mean, the news flow on that front can't be worse now than it's ever been during this whole thing, in my opinion. But the stock market is telling us something different. And if this VIX can break down below 20 and hold below 20, that to me, outside of the stock market, to me, that tells me, hey, we may be starting to get out of the woods here because smart people with real money on the line are making bets that, you know what, things are starting to get back to normal. Now, we're not there yet, David. We're not there yet, but I'm watching this level. This is so important. If we close below there, I'm going to start breathing a little easier.
You know, it's such an interesting chart, Sean, and I love the fact that, you know, when you think about, it's hard to think about what a normal year, quote unquote, would be at this point. But if you look back to 2019, it really fluctuated between the 12 and 20 range. That was sort of normal. So the spike that we had was very unusual. We went to extreme high levels relative to historical precedent. And now we're actually settling back down to what you could argue is more of a normal range. It's pricing in some normalcy, it seems like, right?
Right. And I apologize for not bringing this up at the top for some of our listeners who may not be familiar with what the VIX really measures, but it's commonly thought of as the fear index, right? When VIX is high, that tells people that market participants are worried about whatever, right? And in this case, it was the coronavirus and also the election. The election's out of the way now. But if we see the fear levels in the market come down, I mean, to me, there's no stronger indicator of what's going on in the world than the stock market. I'm biased, of course. I know you are too. We're market participants, but the markets don't lie to us. Only price pays, as our friend Brian Shannon likes to say, and nothing reflects reality more than that.
Well said. Now, we only have about 30 seconds, but I did want to go to your second chart, Sean, which is KLAC, obviously a semiconductor name. Talk us through this one.
Sure, we'll rip through that real quick. Me and the guys at All Star Charts, we're very bullish on the semiconductor sector. If the market's going to break out higher from here, it's going to be led, among others, but big time by the semiconductor industry. And KLAC is one of those names that has broken out of a massive, nearly 20-year base. It broke out of it recently, and it's starting to build upon that. And we think a stock like KLAC has a lot of upside from here, as well as a lot of semiconductor names. And that's the sector we're going to be paying attention to if this bull market continues and grows.
It's undeniable the relative strength that we've seen from semiconductors. That's a great name to highlight, Sean. Sean McLaughlin from All Star Charts. Thanks so much for joining us. Hope you and those around you stay safe, and we'll talk to you again soon, all right?
Thanks, David. Thanks for having me.
That's Sean McLaughlin. He's the chief options strategist at All Star Charts. I didn't mention when he was in the interview we were talking about before, and I'm a Cleveland Browns fan. He's a Buffalo Bills fan. I would not expect we'd be that excited talking about football before the interview, but it was kind of a nice change of pace to be able to compare positive notes about our pro teams for once together. Great to have Sean on. And I totally agree with his take on semiconductors. We've talked about the relative strength, over time from stocks like KLAC and others in the space. Certainly have been good offense and good defense. A lot to think about there. Let's continue on with the show, going into the final bar mailbag. As I mentioned earlier, we'd love to hear from you, particularly questions that you're running into going through your normal process. So let's get to it. Question number one. Good morning. You've mentioned sentiment indicators signaling a bit of euphoria. That's probably understated. I've probably made it a little more than a bit, but you're absolutely right. Are there dependable indicators that measure overall liquidity? That's actually a really interesting question. So a number of things come to mind. Like the first thing that I would think to is like money supply, like the M2, M1 money supply numbers. But it's sort of something I used to follow a great deal and didn't. That was sort of just the supply of, money that was in the system. To be honest with you, when people think of liquidity, I tend to go to volume, right? I mean, I think volume is probably the most simplistic measure of liquidity. If there's volume being transacted in an asset, that means that shares are able to trade, and spotty volume and spotty price data means the liquidity is weak. So for me, the way a chart signals less volatility is if the price data has a lot of gaps, like it's kind of choppy. It doesn't give you a real clear open high, open high low close, which you'll find like in some frontier markets, like in a Vietnamese stock or something. You'll find kind of a gappy, spotty price data because there's just not enough liquidity, not enough trades to really get a good sense of things. I mean, technical analysis is built off of analyzing trends, which need to be a reflection of supply and demand, which means you have to have enough trades to actually quantify things well. It's not really an issue with in the US unless you get to like pink sheet stocks or over-the-counter stocks, for example. So for me, volume would probably be the best measure of liquidity that I would come up with off the top of my head. I'll think about that one more. And in terms of like a macro indication, nothing other than volume that really comes to mind, but I'll ask around and see if I can come up with anything more on that. It's a great question. Question number 2, I've been watching the Final Bar on YouTube for a while, really enjoy it. Thanks for that. What is your idea on how Appian Corporation, APPN, has behaved since the week of November 23rd this year? I'm looking at this chart perhaps for the first time. I haven't looked at this name a lot. Okay, got it. I see what you're looking at. Since November 23rd this year, is an example that the investors should think carefully before participating in such market movements because the fundamental reasons are not clear. So really good question. There's a lot actually that I could touch on in your question. At your last point, should you be careful because the fundamental reasons are not clear? I would definitely encourage you when you're looking at a chart, you can't see what I'm doing, but the ticker in the upper left, as much as you can either physically or mentally cover up the ticker while you're analyzing the chart, it's really important because what you don't want to do is look at a chart like this, think about the fundamental story in your head, and then look at the chart as a way to feel better about your fundamental thesis, to qualify your fundamental thesis. All right, fundamentally, this stock looks good. How does the chart look? Oh, good, the chart looks good too. Okay, great, then this is good. What you're doing is you're biasing your technical read with your fundamental read. You want to look at those totally differently, totally separately. So it is important. I would never encourage you to buy or sell any share of anything without really understanding what the company is and what that price represents, right? And so I think people that just look at the chart and ignore everything else are you're shortchanging your own ability to combine those two in a meaningful way. But you don't want them to cloud each other. You don't want to look at the chart and then find fundamental reasons why the chart should look so good. You want to look at the fundamentals of the company, full stop. You want to look at the chart and analyze the price behavior, full stop. Compare the two of those together, and that's when you have a good unbiased combination. So I would not think about the fundamentals when you're looking at this. What I would say is this is an example of a stock that has absolutely gone vertical. And so the way that you deal with this sort of thing, number one, let's assume you're long and you've been participating in this uptrend. That is the time to be setting stops. And this is a tough one because it went so vertically so quickly and now has come back just as quickly. I mean, coming from 215 down to 125 in a couple of days. I know that's a big move. It reminds me of like GBTC or some of the cryptocurrencies when I'm looking at this chart. But what you want to do is during the way up, make sure that you're setting stops, trailing stops, either literally or with some sort of moving average or something to just make sure that you are following and locking in as much of a gain as possible. And you don't want this day when it's down big over 2 days as a way to identify where your stop is going to be. You want to do that when things are rosy. I always tell people about flying airplanes, and you want to develop your emergency plan while things are good. And when you're able to fly with no problems, that's when you want to develop your emergency plan. Don't do it once the plane, once your engine comes out. That's not the time to figure out what you're going to do in that scenario. Having said that, I would always look to the left on the chart and find key support and resistance levels. So, visually, the first logical thing is, and I know it's a long way from here, is around 90, which is the 50-day moving average. That's a big move lower from here. If you're thinking a little shorter term, might be good to look at like the hourly chart, something that might have more interim support levels that you want to key in on, just as a way to lock in gains, take part of the trade off or whatever you want to do. But that's what I would do. I would start with a trailing plan and ideally do it before something like this pulls back. After that, I would say look at what it does relative to key support levels. The fact that it was extremely overbought on average means you have at least one more move higher before all is said and done, but that remains to be seen. Next question, I would like the chart settings for the BP, SPX, the SPX 50, right, the moving averages and all that. I'm going to send you, the person that's sending that question, I'm going to send you the link as you requested. Happy to do it. But you were actually looking for this chart, and I just wanted to point out, to make a chart like this, where you have the S&P at the top and then you have some breadth indicators at the bottom, it's a common setup that I like to use. And what you want to do is, in the indicator section, do an indicator called price, and then just put the index that you need right here. And these are the indexes for those too. So those indexes you sent me, just put those as as the parameter, and that will chart it as a panel in the bottom. You can change the color and the height to make it look kind of exactly how you want, but I will send you the link to that, to this specific chart for you. Next question, whenever someone refers to the MACD indicator, nobody mentions its accompanying histogram. Why is that? Doesn't the MACD histogram measure strength? Really good question, and I'll switch my chart right here. So I'm not sure. When I look at MACD, I sort of use them together. So if you look at this indicator, the MACD indicator actually has the histogram embedded in the background. This is just a histogram on its own, which some people like to look at separately. It's essentially like the second derivative of the MACD indicator. So it's just basically telling you, what the difference is between those two exponential moving averages, with the idea that the sell signal is when the MACD crosses down through the signal line. That's back here. When it finally turns bullish, that's the buy signal. But the early warning system is when this histogram starts to get more positive, because that tells you that the downtrend, the rate of change is actually, decelerating. It's actually slowing down a little bit, which usually happens right around a bottom. So that change in the histogram is your early warning system. Your confirmation is something like the MACD indicator. So I've seen some people say, they would open a position when the MACD histogram starts rotating higher. They would then, buy the other 50% or close, continue that long position when you get the confirmation signal of the MACD crossing above the signal line. So it sort of gives you an early warning and then a confirmation. I think that's how you would think of it. In our market trend model that I'm showing you back here, I actually do use the histograms. This is the long-term trend model was built on essentially the PPO histogram, looking at the difference between those two moving averages. So it's certainly worthwhile. I think if you're going to use one or the other, I would be using the MACD indicator, because it's by design a lagging indicator. It's designed to lag behind the trend but confirm when the trend has changed direction. I think the histogram is a nice addition to that indicator. That's all the time we have for questions. Thank you all so much for sending in questions. Really, really appreciate it. We need to wrap the show, though, and go to the 3 and 3 charts. 3 minutes. Here we go. Chart number 1 is looking at the put-call ratio. $CPCE is the equity-only put-call ratio. It's interesting. I loved Sean McLaughlin's comments earlier about the VIX and the VIX at low levels. It's always tough with something like the VIX or the put call ratio, because you're always looking left and seeing where we're at relative to historical levels. So right now, the put call ratio is relatively low relative to where it's been. It's incredibly low if you compare it back to 2019. It's like a whole different regime. And so, could it go lower than this? Theoretically, yes, it absolutely could. And if things would switch, if the market would turn down, can it go dramatically higher than it's been for much of the year? Of course it can. There are no bounds like there are for something like RSI. So you have to keep that in mind when you're looking at it. But I think it's interesting to know, when you look at the put call ratio, we're at a pretty low ratio, similar to where we've been to some of these previous short-term topping points. I wouldn't be surprised if we have a little more backing and filling to do before we would rally further on from here. But again, you have to follow price first, and price certainly going higher. Now, what's actually causing those movements? 2 sectors we're going to look at very quickly. Healthcare is number 2. Healthcare had actually an interesting day on the XLV. It might be a little hard to see this, so I'm going to zoom in just a touch here. But if you look at the last 6 months, you can see what happened with the XLV. This is that range, the September peak, the October peak. We broke out of it. We retested it, sort of bounced a little bit. This right here is called a shooting star candle. We have an open, a much higher upper shadow, and then we close back toward the lows. It's sort of a hammer at a bottom that's flipped up on its end and happens at a top. That's sort of short-term bearish. So, a nice breakout and follow through. This is telling me a little bit of a rotation lower in the short term is more likely, as opposed to retesting the highs. But overall, I think on the long term, I like the setup that we see in the XLV, and it'll be interesting to see what groups, probably not pharma, but things like medical supplies, see if they continue to work. Finally, the XLK, again, Sean mentioned semiconductors, which I totally agree with that idea, and the relative strength has certainly been there. The broader XLK threatening a new 52-week closing high, not quite making it above the September high, but in the range of that high day. So I think that's something to watch to see if technology can regain its place toward the top of the sector leader list. That's our show for today. Special thanks to Sean McLaughlin from All Star Charts joining us, sharing his thoughts today. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.